Want to see someone systematically disprove everything you have read about trading stocks and expose how and why you will consistently lose money if you aren't doing it right? Click the link in the description to check it out for yourself. But now for today's video.
The question, what is stock trading? I am a beginner. Answer by, wealth buildup. Stock markets should to never be bet. In the event that you have time and cash, it doesn't mean you can make millions. It requires expertise, persistence, understanding, enthusiastic control, appropriate arranging, learning, hazard administration, diagnostic, and so on. It isn't so much that difficult to gain cash in the stocks, only that it's simple to lose cash. All you have to know is when to leave a stock. Leave a stock if the quarterly outcome was bad. Re-emerge at help or reasonable cost. The part standpoint changes. Re-emerge after the stock bottoms out. It occurs following 1-2 years. Administration isn't sure en route forward. Re-emerge after the stock bottoms out. The obligation of the organization increments and income is falling. Stock is RAD over its reasonable cost fundamentally. Stock is RAD over its help cost technically. You have discovered a decent stock in fact or fundamentally. You can switch. Basic terminologies of stock market. 1. Agent. A brokerage firm is said to be an agent when it acts on behalf of the client in buying or purchasing of shares. At no point of time in the entire transaction that agent will own the shares. 2. Ask/offer. The lowest price an owner is willing to sell the stocks. 3. Assets. Everything the company owns on its name, including the cash, equipments, land, technology etc. which shows the total wealth of the company. 4. At the money. A situation at which an option's strike price is identical to the price of the underlying securities. Options trading activity tends to be high when options are at the money. 5. Bear market. A market in which stock prices are falling consistently. 6. Beta. It is a measurement of relationship between stock price of any particular stock and the movement of whole market. 7. Bid. It is the highest price a buyer is willing to pay for a stock. It is opposite of ask/offer. 8. Blue chip stock. Stocks of large, well-established and financially sound companies which hold a record of consistently increasing rate of paying the dividends over decades to its stock holders. Blue chip stocks typically have a market capitalization in thousands of crores. 9. Board lot. A standard trading unit is defined by the particular exchange board. Board lot size usually depends on the per share price. Common board lot size are 50, 100, 500, 1000 units. 10. Bonds. It is promissory note issued by companies or government to its buyers. It speaks about the specified amount held for a specified time period by the buyer. 11. Book. An electronic record of managing all the pending buy and sell orders of particular stocks. 12. Broker/brokerage firm. A registered securities firm are called broker/brokerage firm. Brokers acts as an advisor for purchase and sell of listed stocks. They do not own the securities at any point at the time, but they charge a commission for their service. 13. Bull market. A market in which the stock price are increasing consistently. 14. Business day. Monday to Friday, excluding public holidays. 15. Call option. An option that is given to investor the right but not obligation to buy a particular stock at a specified price within a specified time period. 16. Close price. The final price at which the stock is traded on a given particular trading day. 17. Commodities. Product used for commerce that are traded on a separate, authorized commodities platform. Commodities include agricultural products and natural resources. 18. Convertible securities. A security, bonds, debentures, preferred stocks, by an issuer that can be converted into other securities of that issuer are known as convertible securities. The conversion usually occurs at the option of the holder, but it may occur at the option of the issuer. 19. Debentures. A type of debt instrument that is not secured by physical assets or collateral. Debentures are backed only by the general creditworthiness and reputation of the issuer. A debenture is an unsecured form of investment. 20. Defensive stock. A stock that provides a constant dividends and stable earnings even in the periods of economic downturn. i.e., even in the extreme critical situations of the stock market, these companies continue to pay the dividends at a constant rate. 21. Delta. The ratio that compares the change in the price of the underlying asset to the corresponding change in the price of a derivative. Sometimes referred to as the hedge ratio. It has a range from 0 to 1. 22. Derivatives, a security whose price is derived from one or more underlying assets. The most common underlying assets include stocks, bonds, commodities, currencies, interest rates and market indexes. 23. Diversification, reducing the investment risk by purchasing shares of different companies operating in different sectors. 24. Dividend, a portion of the company's earnings decided to pay to its shareholders in return to their investments. It is usually declared as a percentage of current share price or some specified INR value, usually decided by the board of directors of the company. 25. Equity, common and preferred stocks, which represents shares in the ownership of a company. 26. Face value, it is the cash denomination or the amount of money the holder of the individual security going to earn from the issuer of the security at the time of maturity. It is also known as par value. 27. Hedge, a strategy or an attempt in reducing the risk of adverse price movements of assets. 28. Income stock, a security which has a solid record of dividend payments and offers the dividend higher than the common stocks. 29. Index, a statistical measurement of change in the economy or security market. Indices have their own calculation methodology and are usually measured as a percentage change in the base value over the time. 30. Initial public offering, IPO, a company's first issue of shares to general public. IPOs are issued by smaller, younger companies seeking funds for expansion and growth, but large companies also practice this to become publicly traded companies. 31. Internet trading. Internet trading is a platform with Internet as a medium. Internet trading execution takes place through order routing system, which will route traders order to exchange trading system. Thus traders sitting in any part of the world can be able to trade using their broker's internet trading system. The Securities and Exchange Board of India (SEBI) approved internet trading in January 2000. 32. Limit order, an order to buy or sell a share at a specified price. The order will be executed only at the specified limit price or even better. A limit order sets a minimum price the seller is willing to accept and maximum price the buyer is willing to pay for it. 33. Listed stocks, the shares of an issuer that are traded on the stock exchange. The issuer has to pay fees to be listed in the stock exchange and abide by the regulations of the stock exchange to maintain listing privilege. 34. Market capitalization, the total value in INR of all of a company's outstanding shares. It is calculated by multiplying all the outstanding shares with the current market price of one share. It determines the company's size in terms of its wealth. 35. Mutual fund, a pool of money managed by experts by investing in stocks, bonds and other securities with the objective of improving their savings. These experts will create a diversified portfolio from these funds. 36. Odd lot, a number of shares which are less than or greater than but not equal to the board lot size. For example, if the board lot size is 100 shares, an odd lot would be 95 or 102 shares. Usually odd lots are difficult for trading and it is not accepted easily in the market. 37. One-sided market, a market that has only potential sellers or only potential buyers but not both. 38. Out of the money, OTM, for call options, this means the stock price is below the strike price. For put options, this means the stock price is above the strike price. The price of out-of-the-money options consists entirely of time value. 39. Portfolio, holding of any individual or institution. A portfolio may include various types of securities of different companies operating in different sectors. 40. Positions limit, maximum number of futures and options contract that any individual investor can hold at any given point of time. 41. Pre-opening session, the pre-open session is for duration of 15 minutes i.e. from 9:00 a.m. to 9:15 a.m. In pre-open session order entry, modification and cancellation takes place. 42. Price earnings, PE, ratio, evaluation of company's last traded share price to its latest reported 12 months earnings per share. For example, if the last traded share price of any X company is 40 Indian rupees and earnings over a last 12 months per share is 2 Indian rupees, then the PE ratio of that X company is 20 Indian rupees, 40 halves. 43. Put option, an option that is given to investor the right to sell a particular stock at a stated price within a specified time period. Put option is purchased by those who believe that particular stock price is going to fall down than the stated price. 44. Risk, a probable chances of investment's actual returns will be reduced than is calculated. Risk is usually measured by calculating the standard deviation of the historical price returns. Standard deviation is directly proportional to the degree of risk associated. 45. Securities, a transferable certificate of ownership of investment in products such as stocks, bonds, future contracts and options which an individual holds. 46. Strike price, the price at which the holder of an option can buy, in case of call option, or sell, in case of put option, the securities they hold when the option is executed. 47. Stock split, an attempt to increase the number of outstanding shares of a company by splitting the existing shares. It is usually done to increase the availability of shares in the market. The usual split ratio is 2:1 or 3:1, i.e., one share is split into 2 or 3. 48. Thin market, a market in which there are comparatively low number of bids to buy and offers to sell. Since the number of transactions is low, the prices are very volatile. 49. Trading session, the period of time from 9:15 a.m. to 3:30 p.m. is open for trading for both sellers and buyers. Within this time frame, all the orders of the day must be placed. Here all the orders placed in pre-opening sessions are matched and executed. 50. Yield, it is the measure of return on investments in terms of percentage. Stock yield is calculated by dividing the current price of the share by the annual dividend paid by the company for that share. For example, if the current price of the share is 100 Indian rupees and the dividend paid is 5 Indian rupees per share annually, then the stock yield is 5%. Wealth Buildup Financial Services. Answer by Nita Mittal. A stock market, equity market or share market is a place where people can buy and sell shares of companies. Companies and individual traders who want to expand their business and capital can opt for share market trading. In share market trading, ownership of a company is sold to investors in form of stocks or shares. Share market is a place where trading of shares take place between two parties, one is the buyer and another one is the seller. Both gets the profit and may suffer a loss in this process. This process contains a high risk of losing money. People like to save their money for their future. The share market provides them an opportunity to invest and earn. Investing is quite a complex exercise. But when it comes to Indian stock market, the basic principles, they are amazingly simple. Anyone can become good investor and reach your goals just by following those simple and easy rules. Here is the list of few stock market tips. Rules for making investment in mutual funds. Answer by Ashwin SP. Stock trading is when you buy and sell shares in stock market. Basically, it's a short-term mechanism. To know more about the difference between trading and investments, download the Stockbook, Share Market Companion, apps on Google Play, and browse through the Learn section of the app, which contains educational videos on all about stock markets.